So without any further ado, I'd like to introduce Jeff Skilling. Many of you know him as our esteemed leader. He is the Chief Operating Officer and President of Enron Corp. And by the virtue of that fact, he is also somebody who is very involved with our operations at Enron Communications. Many of us may not see him on a day-to-day basis, but I can tell you that he's been intimately involved with our efforts over the last 2 years and has been somebody who's had a great deal of involvement in terms of our plans, our vision, and our strategies with Enron Communications. So I'd like to welcome him, our chief spokesman, our chief promoter and supporter, Jeff Skilling.
Well, thank you very much. I'm very pleased to be here, have this opportunity to speak to everyone here. What I'd like to do, and I did not have prearranged speaking points because I wanted to come and talk to you a little bit about what I see the opportunity as being for Enron and for the communications business. I've been told that a lot of the people that are in the audience here today are relatively new to Enron. A lot of people in the audience today really don't know what the roots or the history of the organization were. So I wanted to go back in time a little bit, give you a sense for some of that so that you can see how the communications business fits in with where Enron's going and what the opportunity is. Now, I'll set the stage for this by talking for just a few seconds about Enron's stock price. I guess you all have seen lately the movement in the stock price. We were down in kind of the $35, $36 range about 3 weeks ago. With a little bit of luck, we're going to be over 50 today. And that's going to be a big, yeah, in fact, that's great. That is going to be a great accomplishment, but I'll tell you what, it is just the beginning. And what's driving the stock right now, what is driving the stock right now is the communications business. We've been observing what I call radio silence really for the last 2 years on the communications business. You all have been putting in place what I think is a truly world-class capability in this business, and we're going public with it right now. The first move in the stock was in mid-December. That was after Joe, Ken, myself, David Berberian, and Rex Shelby went up to New York and started talking to the analysts about what we had. And when we talk to them about what we have, they get very excited. And so that was kind of the first bump in the stock. There has been a tremendous amount of interest generated subsequent to that. We've had a couple of write-ups by analysts in the industry. I don't know if you have seen some of those. If you haven't, please get copies of them because they don't have it quite right, but what they've got is put in a very optimistic, upbeat kind of formulation. So that's what's going on in the stock price, and I think we're just starting. I think that we probably have $30 of value from the communications business that has yet to be built into the Enron stock price. And we're going to do everything we can over the next couple of weeks to make that happen. We've got an analyst meeting on January 20th. We have everybody from the communications business involved in that right now. It's going to be real important to get our message across clearly to them, but if we can, I think we've got some real tremendous upside in the business. So that's the context for all of this. Now let me go back a little bit in time because that's kind of an unusual position for a company that's in the energy business in Houston, Texas to be in. In fact, over the last decade, our stock price is up about 700%. That compares with the energy industry, which is about flat over the last 10 years. So a big difference in the two. And I'd like to tell you how that happened and why it is that the communications business is center of the fairway to continuing that path in the future. I first got involved with Enron back in the early 1980s. I was with a company called McKinsey & Company, which was a consulting firm, and we were working with Enron predecessor companies, in fact, a company called Northern Natural Gas, which was headquartered in Omaha, Nebraska. In fact, I can see Todd over here shaking his head knowingly. Todd was with Northern Natural Gas back in the old days, so there's a whole chain of people that have an ancestry that can be traced back to Northern Natural Gas in Omaha, Nebraska. But back in the early 1980s, the natural gas business started to deregulate. And Northern Natural Gas was a very progressive company, and they said, gee, this is interesting. We ought to start looking at this and seeing what implications that has for the business. And so back then, they started building some new activities, new business activities that were going to take advantage of the change that was occurring in the natural gas business as it deregulated. In fact, as a result of some of that first work that I was involved in, we set up a company called Northern Gas Marketing in 1983. The third employee of Northern Gas Marketing was a guy by the name of Ken Rice, who you may all know, who is now involved with the communications business. But so there are a lot of roots that go back to there, and those roots are important to understanding what I think the opportunity is for the business here. Enron was created from the merger of Northern Natural Gas and a company called Houston Natural Gas in 1985. It was late 1985, and the timing could not have been better. Because within about 4 months of the merger, oil prices collapsed, and the deregulation of the natural gas business, which had been threatened for many, many years, actually happened within about a 6-month period. And so we had a company that had a debt to total capitalization structure of 79%. So we were a very, very highly leveraged company. It was one of the first junk bond finance mergers in the industry. And so not only was it highly leveraged, but it was very, very expensive debt at a time when the whole industry was absolutely coming unstuck. Absolutely coming unstuck. And we just struggled by for a couple of years. And I will tell you, there was a period of time in late 1987 where it looked pretty dark. The future did not look bright for Enron. And we had a big meeting. We got everybody together, and we called it the Come to Jesus meeting. And in the Come to Jesus meeting, we all decided that we were either going to take advantage of these changes or we were dead meat. We were going to be roadkill. And so at that point, we decided we were going to throw off the shackles of the old way of thinking, and we're going to try some new things. And that was really the beginning of Enron Corp. 1987, the Come to Jesus meeting, when we decided we were going to do some new things. There were two major activities that came out of that session. One activity was the development of a non-regulated merchant business, which ultimately became ECT, and also the development of an international business to go out and create new facilities worldwide, the natural gas and electric utility business. That became Enron International. Now, it's interesting because those two businesses basically didn't exist before that. And this year, those two businesses will contribute about 80% of Enron's net income in the last 10 years. And each of those two businesses were basically businesses that created new businesses, new markets, continually to stay ahead of the power curve. And I'll give you a part of that sequence because I was with ECT, actually was involved in creating ECT back in the mid-'80s and late 1980s. But we started the natural gas business, merchant business, in the late 1980s. We discovered that there were all sorts of financial products and services that we could offer the marketplace. In like 1988, 1989, Gas Bank was one of the first ones. Gas Bank was a new product idea that a couple of us came up with in front of a blackboard. We went out and sold it and made $1 billion for Enron in about a year and a half with that single product, Gas Bank product. We went into the creation of financial derivatives in the early 1990s, swaps and options in the natural gas business. It was basically taking technology from the financial industry and overlaying it on the natural gas business. That became the whole trading side of ECT. In 1993, the laws started changing electricity, and so we created an electricity business in 1993. Interestingly, that electricity business that we created in 1993, this year will have sales of about $20 billion and is making a significant amount of net income for the company. In 1994, we took that whole activity and went to Europe and the UK. That market today is just exploding. We now have 700 professional people in the UK and Europe. I would expect that business to be growing by 100% a year for the next several years. Tremendous, tremendous growth opportunities there. Then they started deregulating the retail business for natural gas and electricity. We set up a company called Enron Energy Services. In fact, there are a number of people. I see Steve Barth in the background there. Steve has come over to communications from Enron Energy Services. That business was started in 1995. Last year, 1999, we'll have done about $9 billion of contracts in that business. I think we're going to do $16 to $17 billion of contracts in the year 2000. That business is going to make $100 million this year, pre-tax, from a standing start in 1995, 1996. So we've continued to create over and over again new businesses and new markets, because that's what Enron does. If you take those new businesses that came out of the Come to Jesus meeting back in 1987, take all of those new businesses, and if you track just those businesses by themselves over the last decade, they've grown at a compound annual growth rate of revenues of 45% and a compound annual growth rate of earnings of about 50%. And over 10 years, you know the magic of compounding, that gets to be big, big numbers very quickly. So as a company, Enron transitioned, made a huge transition from what we were in the mid-1980s to what we are today at the beginning of this new century. And we're very good at it. And let me tell you what the model is that we've used in those businesses. The first part of the model is first mover. 1987 Come to Jesus meeting, we were struggling. We were trying to find places to go. But what we found is if you got there first and you got there with the most, you tended to win. If there's one thing I'd do differently going back in time, I would not have gone into the new gas businesses as timidly as we did in the late 1980s. But we just didn't know back then. We did not make that mistake in electricity. When we started the electricity business, we threw resources at it. We threw capital at it. We threw good people at it. We threw facilities at it. And we went out and we put a lot of flesh on the line, a lot of flesh on the table when we said, this business will be successful or our reputations are damaged. We put a lot of political and personal capital on the table with that business. The retail business, Enron Energy Services, same thing. We got in, we threw money at it. $150 million burn rate a year for several years, the amount of capital that we put into it. We transferred some of our best people into the organization to get it up and going, but we got in first, and we got in a big way. And now we're going to do the same thing in communications. I forgot to mention Europe. Same thing in Europe. Our biggest competitor in Europe right now is a company called Preussen Electra. This is in the gas and electric business. Preussen Electra has set up a business to operate in the newly deregulating market areas in Europe, on the continent. They today have 13 people in that organization. We have, operating in those same areas, about 350. That's how you win in these markets. You get in first, and you get in powerfully, and you really make a difference as soon as possible. And I'll come back to communications in a minute, but that's what we're going to do in the communications business. So what is the model that we use? The model is this: get in early, but you have to have a good idea. And what the good idea is in these businesses has been for Enron that the old model of the industry, of the energy industry, which, by the way, is exactly the old model of the telecommunications business. The old model of the energy business was rigid, vertically integrated systems that are very, very slow to move. I see Scott shaking his head. Yes, it's true, Scott. It was the same thing in the energy business, same as the telecommunications business. Big, vertically integrated, rigid, capital-rich structures that are very, very slow to move. It looks an awful lot like some of the businesses or industries that were set up 100 years ago. And I'll come back to telecommunications because telecommunications is in some ways worse than what we saw in the electricity and natural gas business. But if you go back 100 years and look at business structures in the United States, take someone like Ford Motor Company. Ford Motor Company, believe it or not, owned forests. They go to the Ford forest and they would cut down Ford trees, put them through the Ford sawmill to make Ford boards to put on the floor of the Model T. Fully vertically integrated. They made their own steel. That was the model. General Motors made radios. I mean, think about that for a minute. General Motors can't make cars. What are they doing making radios? But that was the model. Big, vertically integrated systems, but they were really slow to move because if the customer's desires changed, you couldn't move quick. You had to change the kind of trees you were planting in the forest. That is a very, very difficult thing to do. So along comes someone like Toyota, and Toyota doesn't own the forest. Toyota doesn't make the radios. Toyota doesn't make the steel. Toyota goes out and sources the best, highest quality product from anyone in the world. And they assemble it. They put it together in as low a capital way as possible with as much flexibility as possible built into that system. In the energy business, Enron was Toyota. We put together some key logistics assets And the communications business, those assets are the network. But the model's the same. Put together some key logistics assets that allow you to get access to the customer. That's point number one. Point number two, go out and get the customer. Find out what the customer wants and figure out a way that you can serve the customer what they want. And then number three, once you've got the network and you have the customer, put all the pieces together in a way that you make a product that that customer wants and put them together cheaper than the competitors. That's what we did in the energy business. That business model is fundamentally better than the old vertically integrated structures because the odds that my forest is the lowest cost forest at any given moment of time is zero. So if I can get flexibility in the telecommunications business, if I have the ability not only to use my own network to move content, but can go out and source capacity from other people's networks, I have a significant competitive advantage over the other people that are offering that service to their customers. So that's the model. That's the model that we used in the electricity business. That's the model we used in the natural gas business, and it's worked. In the natural gas business, we went from a small player in the business to where today we are the largest buyer and seller of natural gas in North America by a factor of 2. In the electricity business, we didn't sell electrons 5 years ago. We are now the largest buyer and seller of electricity in North America by a factor of 2. We went to the UK next. In the UK, we are the second largest buyer and seller of natural gas, and by the end of last year, the largest buyer and seller of electricity. Scandinavian markets open. We are the largest buyer and seller of electricity in Scandinavia. The person that started the Scandinavian operation got sick of the darkness in the winter in Norway, so we sent him down to Australia. As of the end of last year, we're the largest buyer and seller of electricity in Australia. It's an amazing thing, the way this happens. But it's a very, very powerful concept. In the retail business, started that business from scratch 4 years ago, we have blown away the competition. There is no one even close to us in that business. So that's the background and context. Now we come to the communications business. The parallels, frankly, are eerie for me. This is deja vu all over again. Our target is the broadband market. That market, high density, high volume data applications, is going to be growing at incredible rates and is going to be a huge market in the future. Everybody wants video streaming capability. Everybody wants high-speed data streaming capability. That's the future. Everybody agrees to that. Everybody knows that's the future. There is a problem. The problem is that the existing system, the existing internet system, was never designed for those types of applications. There's too much congestion. It cannot handle the problem. There are two generic approaches that are being used in the industry to fix that. One approach is people are trying to put some intelligence on the network. That's the Akamais of the world, and that's great. That's you're trying to get from LaGuardia to Newark Airport. You got to drive through Manhattan. It's nice if someone will tell you which streets are less congested than the other streets. But the fact is, you still have a problem because you're trying to get from LaGuardia to Newark Airport and you're going through Manhattan. There's not much you can do, even if you know the good routes, to make that quickly. So it's a great idea. It's going to improve the internet for a little while, but it is not going to solve the problem. So then there's another approach that people have to the business. The other approach is what the MCIs of the world are doing, the Quests, the Sprints, the Williams of the world. What they're saying is, no. The internet model is no good any longer because you need QoS. And so what we're going to do is we're going to go back to the old telecom model, and we're going to hardwire it. This sounds an awful lot like electric utilities, but we want to have the customer that's sending the content hardwired to the end user so you can guarantee quality service from point A to point B. I have a fundamental moral and philosophical problem with that, because they want to control the system. They want to put in place the old monopoly telecom model that nobody wants anymore. What we want is we want to provide the customer with an open, ubiquitous system where they can get the quality and not have to be tied up with a single carrier and getting from point A to point B. So what Enron is going to do, what Enron Communications is going to do, is we're going to put in place enough fiber that we've got the backup, that we can guarantee that we'll be there if the customer wants us. We're going to put it in the distributed servers, and I'll tell you what, we're going to put the pedal to the metal. You saw it out on Shepherd, and we're going to be cranking up the effort out there to get those servers out. They are big servers. They provide tremendous capacity. We're going to be within one hop of any customer that wants to access our network, with the most capacity and the best capacity in all of North America, in all of Europe, and in the key cities in Asia. And then we're going to have software. David and Rex and his people are putting together the capability that will allow us to not only use that hardware and infrastructure, but to access other people's hardware and infrastructure and do it in a smarter way than our competitors are, so that we can offer customers the same vision of service that they got from the internet, but offer it for high bandwidth applications. That's what we're going to do. And this is going to be a powerful, powerful solution for customers, and it's going to be a big, big deal for Enron. There are going to be two components of that as we move forward in terms of how we make money in this business. The first one is that we have got to have the ability to quickly switch between multiple carriers, just like we needed the ability in the gas and electric business to source anybody's production anywhere in the producing areas and go to any customer anywhere in the market areas. So we're going to create an intermediation business. The intermediation business is basically that same natural gas and electric model all over again. And our objective is to be the largest buyer and seller of bandwidth in the world. And we will be the largest buyer and seller of bandwidth in the world. And we're going to do it very, very quickly. So that's one piece. The other piece is that once you've got this capability, there are a lot of customers that have applications that want to use high bandwidth. That's what the people in this room are all talking about. Those are the products and services that we're talking about in this room today. We have got to get out and provide those solutions to customers. So if it's video streaming, we've got to make sure we can provide that service to customers quickly, effectively, at high quality levels. So that's the other piece of the business, and we need to get out with lots of different products to lots of different customers, get them locked up, and show them that we're providing a better service than our competitors. We've gone through all sorts of modeling to look at these businesses, and you're going to start seeing the targets that we've established for these two revenue streams, for the intermediation stream and for the bandwidth services stream. We are going to set some pretty aggressive targets. That's our way. But if we hit those aggressive targets, this business is going to be worth, as I said before, $30 per share of Enron stock, and I think that's just the beginning. That's just from what we see on the horizon right now. And our experience in every other business that we've been in is that once you've got that initial position, you start seeing all of the different add-ons, all of the different opportunities that start to flow out of it, and new businesses that come out of it. My commitment to you from Enron is that we are going to support this effort to the max. We are setting some very aggressive targets for the business, but we are going to support it to the max. All of us in management are now in the process, painful though it is, we are in the process of putting our flesh on the table big time for this business. We are starting to make commitments to people about what we think this business can accomplish over the next several years. And so from now on, when I go out and I talk to people, I say that we are going to do the following 15 things. And now the point is we've got to go out and do them. Got to make them happen. And we will. We are also committing to the capital that's going to be necessary to get the pieces in place. You will have the capital that's necessary. We will put adequate capital, not only adequate capital, we'll put all the capital you need to get this business up and running over the next several years. We're going to get you the people. Most important resource. We're going to get you the people. We need to bring in top quality people to grow this business, because that's the difference between success and failure in every other business that I've been involved in at Enron. And right now, I'll tell you, I think we have some phenomenal people in place in this organization, but we're going to need to ramp that up. As you all know, we need technical services. You know, we've got to grow that business. You all know that particularly well. We need to get that up and running. We've made our first step really in that direction through an acquisition a couple of weeks ago of a software development firm, which will give us more resource, human resource, to help provide the support you all need to get the products out to the customer. There's going to be a lot more of that in the future. We're going to make available people that we've got inside of Enron to move over into the organization to help provide the support there. that you all need to grow the businesses. So we are going to make a major, major concerted effort to grow this business. When it's all said and done, our vision, what we would like to accomplish in this business is we want to become the broadband platform in the world. That's what our objective is going to be in this business. And again, inside of Enron, we have never set an objective like that. We have never put the commitment behind a business that has not achieved its successful targets, not achieved its targets. So that's where we are. Now, the thing I'd ask all of you, I know that over the last year, really 2 years, I guess if I go back 2 years ago when this was first starting, I think we even called it, you all may remember, we called it a stealth business, Steve's stealth business, because we didn't want to scare our shareholders, so we kept it real quiet, because they, anytime you talk about this, they get scared because, oh my God, they're at it again, they're up to something else. So we kept it quiet. A year ago, kept it quiet. Last year, as you all know, we put a major emphasis on the business. And I know it was kind of, I don't know if it was controversial or disconcerting to people when we said, oh, now it's a core business of Enron. Everyone's going, what the hell does that mean? And I don't know what that means either, but it sounded good at the time. But the net of that was that we were committing that this was going to be a significant part of our growth as an organization in the future, and it will be. So there's been a lot of change and a lot of just kind of toing and froing over the last couple of years as we figured out how we want to proceed. It's time now to stop the toing and froing. It is very, very clear what we have to accomplish over the next year. You will see the numbers. They are big numbers, but we're going to make them. You're going to see the execution that's required, getting these servers out, making sure the network's up and running, lighting a bunch of, there's a lot of things that we have to get done over the next year, and the targets are going to be real clear, and we're going to hit those targets as we go through the years. But it's time to stop all the toing and froing. I don't care if you're from Portland. I don't care if you're from Houston. I don't care if you're from a suburb of Detroit. We're all in this together right now. We've got to grow this business. We've got to make this thing happen, and I encourage you all to really get behind it because it is going to be fun. We're going to come out of nowhere in this business. We're going to come out of nowhere, and in 2 or 3 years, we are going to dominate the broadband segment of this industry. And I am absolutely convinced of that and absolutely committed to making that happen. It is going to be fun. We're going to have more fun than we've ever had before in our lives. It's going to be a blast. So with that, I'll open it to any questions and comments that you all have.
Knowing that this particular business is always going to be technically driven and less marketing driven, because in the long run, marketing people will sell what engineers build. Where is Enron as far as, and where is Enron's aggressiveness as far as hiring the correct amount of people, since that is a very scarce market for technical?
Well, we all recognize that getting adequate technical support is crucial. Now, I may challenge you a little bit on, that marketing is not important and technical is important. I think everybody has got an important role to fill here. I think we need to make sure that we've got good people everywhere, and we've got to ramp up that effort. And we've got people that are working real hard on making that happen right now. Yeah.
Well, I think playing off of Doug's question is all the other markets that Enron developed in an unregulated business were essentially ones where technology was very kind of static or slowly changing. This is a rapidly evolving and changing technology field. How is that going to play into the plans? Do you have any concerns about that?
No, I don't have any concerns about it at all. Were you from a former Enron company, by any chance?
From another communications company.
When did you join?
About 6 months ago.
Where are you living now? Which office?
Portland.
You're in Portland? While you're here, I'd encourage you to go downtown and go up to the 31st floor of the Enron building and look at the way business is conducted up there. I think at last count, we had I think it was the 70th largest computing center in the world. It might be in North America, but it might be in the world, in the Enron building, on the 34th floor, actually, to support the trading and intermediation businesses. The technology support, the technology component of that is huge. Because essentially what we're doing is we're using information technology to patch together products and services that used to be provided by integrated physical structures. The amount of data that's handled, the amount of communication that's involved, the amount of just raw computing power that's necessary to make that happen is staggering. So we have a very strong technical capability. We understand the role of technology in supporting a commercial effort, and I think you'll find that it is not an insignificant capability inside of Enron. It is unique in the energy industry, absolutely unique in the energy industry. So I think we understand what's necessary there. I think this business is going to require just orders of magnitude more people than what we had in that business, but it is not something that we don't understand. Yep.
Talking about the value that you predict we could add to the corporation in terms of market capitalization, dollars per share, what would you estimate we've added to the value yet to date?
I'd say the underlying businesses, if you go through some pretty, I think, solid analysis of the underlying businesses are probably worth somewhere in the $40 to $42 a share range today. And so if you go back a couple of weeks, we were soft. The energy business in general was soft, and I think that hurt us a little bit there. But my guess is that as recently as 3 or 4 weeks ago, we maybe had $2 in the stock for the communications business. Most of the run-up above that $42 number is communications. So I would guess that as of close of business today, if we break 50, we probably have $10 in the stock. So I think we got another 20 to go. And that's just for what we're currently talking about here. And again, I think we're all going to find lots and lots of add-on opportunities to expand that business beyond what we currently envision the business as being. So I think it's got a lot of room beyond that. Yes?
In your past experience of growing these businesses, developing capabilities, what business and rapidly expanding the number of people that you have in the company, I haven't seen a lot of growth. How do you manage to overcome the internal process and internal operation now, effectively more going out and selling on the product, making sure we deliver, getting that whole thing together so it flows smoothly?
It never flows smoothly. I remember the first Christmas party that we had for Enron Capital and Trade back, I think it was 1987. We had it in Kurt Kowalski's living room, and there were, I think there were 6 of us there. That business today has a little over 5,000 employees today, and so the process of managing growth is something that I don't think we're that surprised by. Over in the Enron Energy Services, which didn't exist, how many people are over there now, Steve?
About
5,000 from between 1995 and to 1994, I guess, when we got it kicked off. 1994 and today, I went up 5,000 people. I think we found that there's a way to do that. You know, you kind of get a rhythm to make something like that work. But how does it get to be done flawlessly? It doesn't. I mean, it's messy. It is always messy. Anytime something's new, it's ambiguous. And if people can't deal with ambiguity, then they ought to go work for, electric utility or something, because and most of the people that work for electric utilities, if they had a brain, are trying to get out, which is what we have a number of people here that got out. But there's just a lot of ambiguity. I think what I found, what makes it work, is you get a couple of leaders. Not a couple, you get a lot of people that are leaders, and somebody says, hey, this isn't working right, and instead of just saying it isn't working right, they actually do something about it, get in there and pitch in and roll up their sleeves and try to fix problems. I think the biggest differentiating factor between businesses that were successful quickly and businesses that took a while to develop or failed is that you had more people taking personal responsibility and leadership to interject themselves where they needed to interject themselves to make something work. I mean, we've got issues here. I know that with MediaCast, we got a product, we have a great idea. Every single customer is going to be a battle to make sure that they get supported properly to get that product out. It is going to be an absolute battle. And it's going to take a lot of people that are sitting in rooms. You're going to have to yell and scream. If you're not getting what you need to support your customer, you start yelling and screaming. That doesn't mean you're going to get it right away. But I'll tell you what, it's better than not saying something and just letting it go down the tubes. And it requires a lot of personal commitment from all of you in this room to make something like that work. If something's not working, fix it, you know, or let somebody know that it needs to be fixed so that something can be done about it. But I don't expect flawless opportunity or activity. In fact, I expect just the opposite. I expect this to be a mess for a while until you start sorting it out. You know, John, I think you've seen in excruciating detail all the pieces that have to come together and the pieces that aren't quite fitting together. That's the beginning of wisdom, isn't it?
To address your question again, we as a management team have identified that there are three core processes that we're running this business by. It's forming itself as we speak. There's an opportunity now as we start to grow. You can't run a completely ad hoc business. There's got to be a little bit of structure.
Really?
So as time goes on, Jeff and company have us putting enough framework in place to make sure that we can get, for example, medium cast customers out and happy with support, and that we can staff to the right levels and things of that in that area. But when you move from 20 employees to 500, 600 employees, there's some growing pains. But we'll be talking a little later today about some of the process we'll put in place. Too much process scares people away. We should have just enough.
Yeah.
Regards to comments about having a global player and capitalising on the markets in Europe and abroad and the benefit that would bring Enron, do you ever see a day where the corporate headquarters would move from Houston, say, to London or somewhere else?
I couldn't hear real well, but I caught the last sentence, and the last sentence was, could I see a time when headquarters would move from Houston to London? And so I think is that the gist of the question? This is our first London employee, I'm told, so. Maybe our last, that's right.
How that could grow possibly even more in the American market or the other market communication.
Well, if the question relates to international opportunities, you know, the European market, by our best of our calculation, is as big as the North American market for bandwidth. And we have to be a major factor in that market. You know, in the gas and electric business, we have about a 20% market share of gas and electricity in North America. Our target is to get a 20 to 25% market share in Europe. The other place that we're really pushing right now is Japan. Japan's the third largest energy market, third largest telecommunications market. We need a significant position in Japan and Asia as well. But I'd like to see us in this business, because I think we got a better concept. I'd like us to be targeting the 20 to 30% kind of market share in this business, which I don't think is unattainable. And that has to be done worldwide. We have got to become an organization that can operate not just in Houston, not just in Portland. We have to be able to operate all around the world. And that's going to be a critical factor as time goes on. And it's going to be important for all of you as you develop expertise and capability here in North America. Over time, we're going to ask people to start going out to other places. We have to send you to Europe or send you to Japan so you can get those people up to speed or help build that capability elsewhere around the world. So this, I view, as a seed, and then we have to figure out how we grow it in other places. But if the question is, are we committed to growing in the European market, the Asian market? Absolutely. I don't think we can be a major factor if we're not a significant player in those other markets. And by significant, I'm talking about 20 to 30% kind of market share in the broadband business, you know, in the 4 to 5 year time frame.
Thank you.
Yes.
Is Enron going to wholesale and retail?
Okay, the question is, are we going to wholesale and retail bandwidth? There's a little bit of a nomenclature, and I don't know if there's the same nomenclature in telecommunications as there is in the energy business, but in energy, a wholesale transaction is a sale for resale. Okay, that's the regulatory definition. I think most of us think of wholesale as being just a big sale. I guess the way I'd look at this business is that we want to be a big player in the business. So I think ultimately we will have a wholesale, a sale for resale business for capacity, But I think ultimately we have got to get all of the big bandwidth customers contracted directly with Enron. So I think over time we'll have the same sort of outsourcing activity. In fact, I think outsourcing of bandwidth management services to large industrial customers will be a major component of our business moving forward. Now, again, by nomenclature, that is a retail market, but I think we're talking maybe a better designation is business to business, but typically the larger players in the marketplace. But I think we have to be contracting and dealing directly with people that are providing the content, the people that are using the content. But I think we ought to be focusing on the big people, at least initially. Any other comments or questions? Okay, one more.
How does Enron's strategy differ from AT&T's strategy, laying on fiber optics and broadband data center?
Okay, the difference between Enron's strategy and AT&T's strategy. I personally think AT&T is going in the right direction. I think that they need to connect that last mile. They have to find some way to control that last mile, and whether it's wireless, whether it's cable, whatever, they need to have some connection to that end-use customer. I think AT&T is absolutely out of their minds if they invest $1 in a fiber network to support that last mile at the wholesale level. They don't need it. Come to us. There's no reason for AT&T to be in that business. And I would imagine over time, you'll see this breakup of these big vertically integrated chains. And you're going to have people that provide a last mile solution. That will not be Enron. You'll have people that are providing the center, the wholesale, large volume, long distance transmission service. That will be Enron. That's where we'll be competing. But I think you'll see the breaking up of the business. I think we could potentially be very complementary with somebody like an AT&T. I think we could be very complementary with a level 3. Because what we want to do is we want to have more bandwidth throughput than we've got capacity on our network. And we need to be working with other networks at a wholesale level to get access to their capacity. Level 3 is great. Global crossing is great. Where we're going to go head-to-head, so people like the Quests, people like the Williams, people like the MCIs that are trying to lock up that whole chain again. And they want to be major players at the wholesale levels where we are and the capacity levels. And they also want to tie directly to the customer and tie those customers to their system. Those are the people we're going to go head-to-head with. Those are the people we're going to have trouble with. Those are the people that are going to dislike everything that we're trying to accomplish in the marketplace. The level 3s are going to like it. I think the global crossings are going to like it. I think AT&T thinks they don't like it, but if they ever woke up to the fact that they don't need to invest all this money in a network, I think they'll like it too. They'll see that we're complementary. With that, I'm going to... Yeah.
I was going to ask one other question. I feel like various times we've talked about spinning out the business or selling the business or getting investments, major investments from folks. And I know people are interested in that issue. Could you talk a little bit about that?
Sure. The key from Enron's standpoint is that we want to get the value of this business transferred to our shareholders. Now, if we create a business, and if the business is successful and there's enormous value in this business and it is not translated into the Enron stock, then we will sell the business. We will split it off to get valuation. My personal opinion is that as long as you're willing to do that, we will get the valuation in Enron stock. Because anytime they start saying, well, there's not enough valuation, then they go, oh, well, they're crazy enough to sell it, or they're crazy enough to IPO it. Then you get it in the stock. I would like to keep the businesses together. I personally believe that this is absolutely center of the fairway for the skill base that's been developed in Enron over the last 10 or 15 years. And you all will see more of that as time goes on. You're going to see that there's a capability here that can be enormously helpful in building this business in the future. I want to keep the businesses together. But the only way I'm going to be able to keep the businesses together is to be damn good and ready to split them apart if we don't get the valuation in the Enron stock. And as long as the analysts are convinced that I'm willing to do that, we'll get the valuation in the Enron stock, and then we'll have the ability to get the people moved, get access to resource, and the capital to grow this business. You know, most people don't realize some of our competitors, they have no money. They have no money. They are absolutely dependent on the existing IPO market to stay in business, to fund general operating expenses. The IPO market is a funny market. All of us have kind of gotten used to seeing the IPO market. In the last 40 years, the IPO market has been open for 4 years. Most people don't realize it. In the last 40 years, the IPO market has been open for 4 years. It will close again. And when the IPO market closes, there are going to be a lot of companies out there that will not be able to fund their general operating expenses. And in that kind of a marketplace, we are going to be awesome. We've got $2.4 billion of free cash flow at the Enron level. We can fully fund all of the capital we need in this business next year to $600 million level. We have got capital. I've got a total asset base at the Enron level of $52 billion, if you include our on-balance sheet and off-balance sheet activities. I can sell a power plant in Guam and finance half of the capital requirements of ECI next year, if that puts it in perspective. We can be a powerhouse in this business. But that's one of the arguments for keeping it together. Because if we can keep it together and we get the power of the organization tied together with the creativity that you all are providing to the table. Well, listen, I am sorry I've taken so long. I just wanted to try to get that message across so you get a sense for how committed we are to the business. I wish you good luck. This is crucial, absolutely crucial. Hang in there. I know it's going to be a boring day today, but we need to sell. We need to get out there. We need to get customers. We need to get revenues in the door. And this is going to be the first major product for doing that. So I wish you good luck in pulling it all together. Thank you very much.
So this is pretty impressive. It wasn't too long ago, beginning of middle of last year, when we'd have our national sales meetings on Fridays in Scott Yeager's office, and Scott would yell at us we'd have a conversation for about 4 hours. And we'd come out of there and, talk about, that'd be our sales strategy for that week. So this is pretty impressive now that we're all here together. Anyway, I'm Matt Harris. A group of us, we work on the financial services vertical. We're basically responsible for selling and marketing and doing business development around e-powered applications for financial services customers. Those include banks and brokerages, insurance firms, and a lot of the firms that service those companies, or even in the enterprise when they have any investor relations announcements and things like that. So just a little bit about our business plan and what we do before I get into customers and the product and everything like that. I get a lot of calls from people, why are we in financial services? What are we doing? Why do we pick this vertical? Why do we pick media entertainment and a lot of things like that? Well, at the end of the summer of 99, we went through a pretty big exercise of a bunch of really smart people thinking, hey, what's a good way to kickstart our application services? They were coming out of development into production. We said, hey, what's the best way to get them into customers' hands? And so we went through a somewhat rigorous analysis of what were some good industries to come into. And basically, this is a simple way of looking at it. But if you look at, if you were to break down different opportunities into 4 quadrants, and a quadrant on the ordinate axis of IT spending versus high versus low, and fulfillment on the x-axis of data versus physical fulfillment. Basically, home run industries for Enron Communications have data fulfillment when they're spending a lot on IT. Those are broadband users. And so, if we weren't even going to do any analysis and just say what industries are interesting to us, we'd pick industries in that green quadrant there. And lo and behold, financial services and media entertainment, they ended up high on both of those scales, and that's why we're going after them. We looked at a bunch of others as well, and other industries will fit into that quadrant as we go forward. But more or less, that's a good way of looking at what we did. So for financial services, more or less, we have a phased approach of how we get into this market. And really, it's all about growing and getting in and getting known. And so our first is a focused sales and marketing of our existing services. That's our CAST service, which we call e-powered market CAST. And then we want to migrate to more value-add types of services. Maybe some that don't generate a whole lot of money, but that get us in more. And then finally, we want to become a complete outsourced provider for application services for the financial vertical. And that's basically our strategy. And phase one, as an opportunity description, included stream hosting, obviously, e-powered MarketCast, as well as video conferencing. Video conferencing and streaming to our customers and a lot of our suppliers are really the same thing. It's data bits that are coming over big pipes, and they're all connected together. They're streaming bits. Phase two, and John Bloomer was sitting up front, but he's not anymore. I wish he was taking notes. But what we're trying to say here is that we're talking about phase one right now. Phase two is a lot bigger. We're not in the financial services vertical to sell streaming media, believe it or not. We're selling streaming media, but there are some tremendous opportunities beyond that. Simple application hosting. We have a high bandwidth, high QoS, secure network that is great for transactions, that is great for websites, that is great for the uses, for high quality uses in the financial services vertical. There's a tremendous market opportunity in this, where we marry our data centers to our bandwidth, to the software solutions that we have, and we can provide a complete solution. This is what we're going to grow into. And then finally, we take that into a complete application solution that we bring out to financial services customers, like online banking, electronic bill payment and presentment, and online customer care. And I'll give you a demonstration of that in a second. But for online banking, for example, I'll just give you some statistics there. There are 14,000 banks and financial services groups, companies in the U.S. today. That number's not increasing. In fact, it's probably going a little bit down because of consolidation. At the end of last year, 3,000 of those companies were online, had online services. By the end of this year and early next year, the number is supposed to be 12,000 of them. So the growth between 3,000 to 12,000 and all the penetration of online services into that market happens now. So we are incredibly well situated of getting in, getting known, and then providing these guys with really high quality value-add services that really take advantage of everything that we have to offer, the marriage of our bandwidth, the marriage of our hardware, the marriage of our software. So to Jeff's point, he wants big numbers. This is what we can grow into. When we took a look at this, the opportunities in this marketplace, where Enron Communications is garnering fractions of a penny per transaction in some of these marketplaces, without even a significant market share. These very quickly, because of the growth in some of the these internet businesses and financial services, these very quickly turn into very large opportunities. And really, in the application space, the space that Enron Communications is focusing, that drives significant amount of growth. So our whole strategy for this opportunity is get in, get known, and then grow. So now I want to talk a little about MarketCast. It's important, I think, and it's really important. We're working hard at distinguishing MarketCast from MediaCast. Banks don't want to hear about MediaCast, because they think that that's something that ABC should buy, which they should. And April will tell you about that. Wells Fargo wants to buy MarketCast. Fidelity wants to buy MarketCast. The name is important. We're going to call it MarketCast. We'll tell you a little bit about what's important to customers. First thing off is a simple message is super important to customers. We started pitching the EIN, the Enron Intelligent Network. And believe me, Lehman Brothers doesn't want to buy an Enron Intelligent Network. But they do want to buy television quality streaming media for road shows, investor relations announcements, news feeds, corporate training, and that kind of thing. And what we've done, I think that's been pretty effective, is we've really honed and targeted our message to something that's really simple and easy to understand. And just to give you a demonstration of some of the things that we do, let me quickly jump into this. This is a demo that we put together for financial services firms. Sort of talks about what our services can do for an e-powered website, internal or external. And so if we look at investor relations, for example, an e-powered investor relations stream would look something like this.
from Enron, posting third quarter earnings right in line with forecast. The electricity and natural gas producer reported a 33% rise in income led by strong growth in its power marketing units. And on the news,
we'll talk about our stock being at 39 here. You know, that was a while ago. We have better news than that now. And so this is kind of what we're talking about for investor relations. This is the easy stuff. This is what we can know how to do right now. What Lehman Brothers bought from us was this.
Good afternoon, everyone.
Which
My
is
name is
a
Harold Parker.
live, real-time feed,
We're here today to tell you
which is
about a unique
interconnected
investment
to a
opportunity.
presentation. This is actually a demonstration of an IPO, a virtual roadshow.
Company called
and Lehman Brothers bought, you know, this whole thing from us. So it's not enough, and we'll talk about a little bit more about this in a second. Yes, we do stream production, but Lehman's asking for a holistic solution. They want the website, they want the presentation, they want the two synchronized and put together. And this is kind of what we see the future of our services, what we can do.
I just watched the quarterly earnings announcement for KMP.
So if you integrate broadband and all of the things that we can do with the video conferencing, with real-time news feeds, with our rapid applications, with our bandwidth and our data centers, you can get to an online customer care solution that's unsurpassed. And for our industry, for this financial services industries, they're trying to make their online experience indistinguishable from their offline experience. This makes it happen.
The PE ratio is 18. Most of their competitors have PE ratios of 25.
Well, why is their PE ratio so much lower?
So that voice is you, the
company
customer,
in the past year, and
she's her broker, and she's driving his browser in real time, helping to make investments and stuff like that. So this is kind of our vision for the future. When we pitch this to customers, they get it. They're like, okay, cool. I get it. I get the value that I can bring to my customers. And this is your vision for upsell. Good. They want to see that.
Since last quarter. So it looks like they're
Sure. Customers are also looking for complete solutions. They don't, it's perfect for us just to say, hey, throw a T1 into us and we'll be done with it. That's generally nobody wants that. They want a complete solution, and a lot of things we're able to provide and we're migrating to provide allows us to do that. They also want leading technology. And the real distinguishing characteristic about Enron Communications versus the Akamais and the Sandpipers, the Digital Islands of the world, is that we are the only company integrating bandwidth and hardware and software together to provide a better solution. Some of those other folks are doing 2 of those 3, but nobody's doing 3 of those 3. And 3 of those 3 means you have the best possible solution. So when we talk about the leading technology that we have, we talk about how we marry the best bandwidth, a carrier-class network, to the best hardware, again, carrier-class hardware, to the best software. And we have an army of software people developing software solutions and optimizing them for our network. And, that wakes people up. And then finally, we talk about our reach. And the important thing about our reach is that it's targeted reach, but then it's everywhere, right? And that's which is kind of an anomaly. But our customers are targeted customers. They're the private client customers, for example. But those private client customers can live anywhere. So really, reach and access that John's going to talk about are super important to us. And even though it's targeted, it's got to be everywhere. Also, what's important to us is international reach and things like that. And so opening up our London data centers and things like that, moving into Tokyo, kind of stuff Jeff was talking about, just really, really helps us. And then finally, what we've been able to do is actually get some customers. Last quarter, we're originally a young group. We started in the middle of October, but I think we've been able to come up with some pretty good customers. And just for a second, Lehman Brothers, which we did their first event on January 6th, right? That was an event where their CEO, he broadcast their annual conference to the entire company. And I just want to get a few people to stand up for a second. I want Leslie Schur, Greg Reynolds, and Phil Cisneros to stand up for a second. And I want to applaud these people. Because these guys went all around to try to get Lehman to sign the contract and to convince them that we can do this. In fact, Lima was asking for connectivity to our network, and we needed a router to go make that happen. And we said, we'll sign the contract and we'll get you the router. And they said, no, we want to see the connectivity first. And we said, we're going to sign the contract. And they said, give us the connectivity. So, we got the router in there trying to make it happen. The router didn't show up. So Greg Reynolds went to the New York office and he ripped out the router that was sitting in the New York office that was giving all those guys. And he carried it over to Lima in a cab and he plugged it in there, and they signed the contract. Anyway, this is the kind of stuff that it takes. I mean, I'm glad we're going to talk about processes because, this is the stuff that we're going through now. What it takes to make the customers and make them happy, and these guys are just doing an unbelievable job. We're doing another event with them on the 18th, right, where we're going to be doing a webcast to all their private clients. PR Newswire, there's an asterisk there. That's an LOI, but we're going to get that done. I'm not worried about that. It's an announcement. It's events for all of their PR Newswire customers for the next 3 years. That's a really big deal that we're really excited about. Roadshow.com, Q4I, Capstone Institute. Mike Rabin, he started with us in the middle of October, got these 3 .coms to sign up, by the middle of December. It's an unbelievable job on Mike Rabin's part. Roadshow.com. In fact, I think 2 of these 3 are going to be interviewed for the analyst meeting that Enron's having on January 20th. The Roadshow events, Streaming Information Independent Brokers, and Capstone Institute, believe it or not, is the #1 trainer of mortgage brokers in the United States. And they're going to be doing all their training online. Anderson Consulting, we're going to be hooking up one of their demo centers, the Financial Ideas Exchange in New York. And they're going to be doing this ACTV, Anderson Consulting TV, to internal Anderson customers. And On24 is a big streaming news portal for online investors. And then we have a bunch of new customers coming soon that the entire team's been involved in. And just to wrap up real quick, here's our team. We're growing, but we're a good group of people. We're pretty much our epicenters are in right now in Portland, Denver, and New York. We're hiring some people in Houston, starting today. Teresa Reevan's running our marketing efforts. Michael Smythe is our business development person right now, and Michael's going to get super plugged into the whole war room process, and looking at ways that we can get more value out of deals in our customers. And Leslie Schur has been running our New York regional office there, and Mike's been in the central. The last thing I want to say, to find out more about us, what we do, in the interest of full disclosure, we pretty much put everything about us on our website. This is the website address. Please write this down in case you don't have it. This is the website address to the Enron Communications intranet. On this, you will find everything there's to know about what we're doing, including our business development activity, our green sheets, and again, full disclosure, we talk about all of our deal flow, our org charts, sales presentations, demos, everything you might want to know about us. Go here first. And then, if you can't find it there, call us. And then we'll put it up there, to make sure, because we want to get a lot of information up there. We really want to work. Our business plans are up here that talks about what we want to grow into and everything like that. It's all there. Please go here. If it's not there, let us know. We'll put up some stuff to get it there. And we're just happy to be here.
I'm April Hodgson, for those of you that don't know me. I'm actually almost an old-timer with ECI now because I've actually been here a year, and we have seen a lot of growth in the past year. I personally really took Dave and Scott's comments to heart yesterday because it's very easy, especially when you've been here that long going through the process, to get frustrated by where we are not. And it's important, and yesterday I really did that. You take a step back and you look at where we are, because we have come an incredible distance in 1 year. Kind of going to the stealth idea, I have 18 years of broadcasting experience, and I was sitting in CBS's office last December, and the customer there told me, "So are you guys involved with this Enron thing?" And I said, "What are you talking about?" She said, "Well, they have a 20,000-mile terrestrial fiber network." I said, "Chris, nobody could have a 20,000-mile terrestrial fiber network that no one knows about." She said, they do. I said, well, give me the guy's card. And I called Bill Collins, and 2 weeks later I was working with Enron because they really did have it. Not only did they have it, but they had some incredible ideas of what they could do with it. I think that in itself has been probably our biggest challenge in the past year in getting the broadcast industry to also believe that that's out there. Broadcasters tend to not believe what they can't see. So we have been able to, over the past year, prove to customers that it is out there and it does exist, to the point that within the last 2 months, Warner Brothers told us that for their broadband future, Enron has the only network that they can put their broadband distribution on. BMG Music called me 2 days ago unsolicited because they heard about us. So those are the kind of things that we do need to step back and take a look at. That's where we've come in the past year without a doubt. In the media services group, our group's really different from Matt's group. Matt has a stronger challenge as far as creating market. We work with people who really do understand broadcasting. All they want is a pipe and someone to put it out there for them. So our approach is a little different, and how we go at things a little different. The first thing I wanted to look at is how we're set up. We try to set our sales team up regionally to put them in the major broadcast centers. LA obviously is a huge area for us. New York's another big area. Denver's becoming an area. Excuse me, Atlanta's a big area, largely because of the Turner and CNN influence there. And also Miami's a big area for us because that is the gateway to Latin America. All the broadcasters that are in the U.S. also go into Latin America. So we kind of go that way with the sales as far as regionalizing it, and then we will be bringing some resellers on. So for that side, we have Steve McNair as our channel manager, so that when our salespeople bring in a deal for a reseller, they're not caught in that day-to-day of training all of their salespeople, making sure they have the materials they need, etc. He takes care of that, and also Tracy Smith joined our group today to be our liaison into corporate communications to make sure we get the press recognition that we need, we have the right people on panels at shows, and we're going to the right shows. I think one of the biggest things we've had to do over the past year is qualify customers and learn how to do that, because there are a ton of .coms out there, and everybody realizes that we have the future of this idea. A lot of them, unfortunately, don't have money to pay for it right now. So we can spend a lot of time spinning wheels on customers that really aren't ready for what we want to do. First thing we like to do is we look for somebody with content, preferably original content, that drives users to their site in large numbers, because we get paid on consumption. That goes back to people with a plan to go to high bit rate or to broadband. There are customers out there that just want to stream. They want to stream the cheapest way. It's not necessarily the best customer for us to go after, because we want people to drive that 300 kilobit, 400 kilobit, and more type user, because that's where we start to make the big money. We have to do a lot of users at 28 kilobits per second before we can get into any money. The next thing we're looking at is content that's consistently accessed, and that kind of goes into the limited content storage piece here. Somebody that has hundreds of gigabits of storage isn't necessarily our best customer if every piece of that is only being accessed twice a year. We want people with smaller amounts of storage, that those smaller amounts are constantly being accessed. That way it maximizes the usage of the storage on our network, while at the same time it drives the higher streaming rates, which gives us our consumption model and obviously larger numbers. Probably the biggest thing we do here on a first call is how are they making money? Everybody knows they want our network, but they haven't all figured out how to pay for it yet. So we're looking at people who are driving not only advertising or banner ad type things, but also pay-per-view subscription models, and especially e-commerce models coming forth. A perfect example of that would be Den, who I'm going to talk about in a little bit, but Den is kind of the perfect on all of these things, because they have a lot of content, but it's content that is constantly accessed. So in equation, it's pretty similar. But their model is not only an advertising model. Den will ultimately make all of their money from the e-commerce applications that they can do off their site, down to their shopping mall, down to, because they do the production, actually having people do ads in the middle of a show. And I will get into that in just a minute. The other thing, if we do events, everybody does events, and our network is ideal for events because we can guarantee the bandwidth will be there for their audiences. On the other hand, we don't want to just do one-off events because it's very taxing on John Bloomer's crew. So what we like to look for are events with large simultaneous audiences, because obviously that drives the largest amounts of stream, and also things that will get us national recognition. An example of this would be the Drew Carey Show that maybe many of you heard about. It was a part of Disney, ABC, and Warner Brothers Online, where they did a simulcast of Drew Carey with the national network programming. It was a huge success, and actually at one point they felt that they had 1% of the New York audience, which is huge in the broadcast industry, to have them actually looking at the streaming side of it as well. Those are the kind of things we want, because we can get more than just the consumption value out of it. We're also looking for customers on the event side who are very savvy and who can handle a lot of that back end, because that reduces some of the responsibility we have. And finally, if we are doing large event audiences, we want them to have that on-demand content. Again, driving the consumption, driving money for Enron. I'm not going to go into the pricing overview a lot, but I think my only point on this slide is to say, a year ago when we first went out, we just said we have this consumption model and we'll take it to people and they'll buy it and it's a great network. We are the only people out there with this type of a consumption model, and customers get very scared because they say, well, you know, my product's great, so it's probably going to cost me $1 million a month because I know everybody's going to come to my site. It's very hard for them to get comfortable to committing to something and signing a contract unless they can budget and know what it's going to cost them every month. As a result, and Kirk will go into this more, we've kind of created tiers to give people comfort zones. But this is a huge part of our process when we go into customers to help them understand and qualify just about how many megabytes a month they are going to consume, because they have to get comfortable with that number. As Matt was saying before, all of our salespeople are not Xerox salespeople. Every one of these people is going in there. They're helping their customers develop their business models. They're helping them understand what their streaming business will be in the future, and at the same time selling the values of the Enron network. It is not a simple sell. It's a long process, and it takes some very intelligent and very dedicated people to do it. This is a quick look at the contracts that we closed in fourth quarter. I do want to pick a couple of these out so you can get an idea of the type of customers that we're looking at. Den would probably be our premier customer at this point. It's a huge deal financially on several points. Number one, they have a huge minimum required consumption rate per month. So even if their product's not as good as they think it is, they still have to pay Enron no matter what. We also are charging them a significant amount for storage on our network because they do have a fair amount of storage, and at this point it limits our ability to bring some other customers into the network. What Den does is the principals of the company come from companies like Microsoft, HBO, and Disney, and they have created, in essence, a broadcast online network. They produce programming. They're 6-minute programs, and they have 8 different series up now, and every week they add 2 new episodes to each one of those series. So what they have created is a network for people to go in and watch the shows that they like when they want, and they also come back every week because they know there are 2 new episodes. But the other episodes are there, so if you want to look at the entire series of them before you start watching the new episodes, you can. Or if you particularly liked a certain episode, want to show your friends, which then makes your friends start coming to the site. It is a great model for driving large numbers of consumption. Because they control all the production, they actually produce the programs so they show better on the internet. There's less movement, the lighting's right, etc. Ultimately, what they will do is they will incorporate their advertising into it. They have some major sponsors now, but because they do the production, at any given point, one of the cast members can turn around and say, is this the coolest jacket you ever saw? You can get it for $45 at the Gap. Click on it and buy it. This is the kind of ideas that people are working on out there, and these are the kind of customers we want because they're very creative people, but they are driven by making a lot of money. And when they make a lot of money, Enron makes a lot of money. The next one I want to go down to on here is webcast.com. Webcast.com is a good example of an events-type customer that we want to go after. We do have a signed contract with them. One of the first things they do is they do the Lotus Sphere events, which I'm not sure if everyone knows about. It is a 2-day online conference for Lotus users. It generally drives a simultaneous audience of 100,000 users. So that's huge for us. They also have an international piece and a domestic piece on this. The big thing about webcast.com is for their customers, they develop the website, they do sponsorship, They do the encoding. They do the production. It is a total package. So for us, all we have to do is plug in the Enron network to wherever they are, and they are very savvy on handling their end. They also do things like NCAA basketball and Final Four. Obviously, those are huge events, and that's the type of events customer that we're happy to have. And like I say, it's great for us right now because we have signed a contract with them. M-Show would be another example, who will be here later today. M-Show considers themselves an interactive broadband broadcast center. And what they do is they incorporate things like PowerPoint slides and streaming media into one format with proprietary software, and then they go to the business community with that. M-Show has also signed an agreement with us, and we're working and partnering on many things with them, and that's why you'll see them today. Just in this group alone from the fourth quarter, confirmed revenue means their minimum monthly commitments or storage charges is already $2.1 million of revenue towards next year. Because they have minimum monthly storage, they also pay for additional things beyond that. For instance, if we do special events production for them, or if they stream above their minimum commitment. So there are projected revenues just for this group alone for next year of $3.2 million. So I think that's important for everyone in this audience. Probably one of the most frustrating things for people in the last year is, where are the customers and where do we see them? On the sales side, I think we start to take it for granted because we are out there and we realize people do want to use the network. So I hope this helps people to understand there really are real live customers on the network. We're turning people up all the time. As you can see, these customers all start in January for the most part, or February 1st. It really is coming, and every time we add customers to this list, both from Matt's group and from my group, it makes it easier to go out and do the next sell. We right now have three very big deals on the table with three very big players that hopefully will be closed very soon. Again, it just creates our market recognition and makes it stronger. Our focus for 2000 is to continue the momentum we've been able to start and keep going here. Probably the biggest thing, because this is what broadcast is about, is creating that market recognition. We want people to say, I know the Enron name. This is happening just by the fact of BMG Music called me 2 days ago and said, I've heard about your network. I want you guys to come present, because for us and for delivery of music, I think you guys are the only ones that can do it. So it is starting to happen. We have to keep that machine rolling. It's probably one of the most important things we can do going forth from this point. And we want to use that recognition to close other content providers. We do have to keep growing our sales team. We've added 3 people in the last month. We have 2 more offers on the table right now, but we can't get salespeople fast enough. If anybody knows some really good people in LA, we could use about 5 people in LA right now. So please, I think they're starting to call me the raider of EES at this point, because we've really been able to draw a lot of people from EES. But people can learn the broadcast side. We're looking for bright, intelligent people that we can put out there in the field. And that is it for me.
Good morning, I'm John McClain. Can you hear me okay? Wig, good morning. Matt gave me a really good idea. I'd like my people to stand up first, because it's just something I'd like to do. So if Stephen and Ben and Jeff and Bobby would first stand up. These are my 4 direct reports. They are amazing. We closed 20 deals, or a little over 20 deals last year. And we only had to pay 2 of them just a little bit of money to close those deals. So without giving out any cash, we closed over 20 deals last year, and they made it happen. And then everybody else that's in distribution, if you would, Steve and Lucy and Doug, please, Greg, if everybody would stand up. So Alan, put a face. We're bordering on 20 people. Thanks. Yeah. I want to make a small apology. I was under the impression that I was doing this presentation tomorrow morning, and we created a presentation with really no graphics at all, and a lot of what we do, it's kind of good to visualize it to get an idea about what we do. So there's just a lot of text here, and the reason we did that, we thought you would have already gone through a day of product training, and we were erroneous, but I'll do my best to explain it. Also, listening to Matt and April, I kind of thought of a couple of things I'd like to say, and I just want to, I'm always dumbed down, so I want to make sure I dumb everything down, especially to what we're doing. MediaCast and MarketCast is absolutely about making television over the internet work. Now, for a lot of different reasons, you wouldn't want to use that vernacular in the business, but streaming multimedia does not work on the internet today for a number of reasons. Most notably, everything that made the internet successful is exactly what makes it bad for isochronous traffic streams, which are voice and video. So the internet is also a very, very, very amazing tool because it reaches everybody, and just the implications of being able to put streaming media anywhere on the World Wide Web and to be able to click on it and use it and it actually works is obviously very compelling, and especially some of the e-commerce applications. So we are that's what we're committed to. That's what Matt and April are talking about, and they're trying to go out and help propagate streaming media on the internet. One last for IP subscribers. One last notable thing that I use a lot, this market was about a $20 million market. Oh, you can't hear me? Oh, great. Okay. I'm usually accused of talking too loud. I never yell, right? It was a $20 million market in '98, so it was infinitesimal. And one of the major reasons, or at least the way I look at it, is it's because it didn't work. It's because delivery of streaming multimedia on the internet does not work, so that's why the market is so small, because very few content providers create content for it. So let me go through my, and what we're about, what the broadband delivery program is about, is putting servers out in strategic points in the internet and within multiple IP networks to allow these streams to be delivered. This takes server power, CPU power. It definitely takes a server and a router and equipment to make these streams get delivered to IP subscribers or any end user for that matter. So, yeah, last year we were calling ourselves distribution and or ISP sales, and Stephen Sunshine came up with the broadband delivery program, and that's what we're sticking with. Again, we contract companies to put servers in their network as close to the edge, and what that term means is as close to the subscriber as possible as we can get. And what that does is it increases the performance and allows us to deliver these streams to the end user. And really, success equals number of servers and both putting them again in private and public network points. And you'll hear a term that's used pretty regularly. It's called reach, and just servers everywhere, close to network service providers and close to end users. So our goal for 2000 is to get about 3,500 servers out there, and hopefully we'll blow that out of the water. But that's our goal right now. And the types of entities you would see us connecting to or doing deals with, actually some of these entities up here are actually current distribution partners, and some of them are prospects. But a CLEC is a competitive local exchange carrier, and that acronym just sort of symbolizes anybody that's in the dial tone business or what's called the local loop business and competing with the regional Bell operating company. Many of them are very, very compelling and have a lot of lucrative connections to end users, and also co-locate internet service providers. Regional Bell operating companies, of course, we actually do have an MOU with Bell South right now, and we're in the final hours of our larger definitive agreement with them, and we will aggressively pursue the other three, which we're already doing. Internet service providers, most of the 20 deals that I mentioned are currently with internet service providers. And for instance, Verio, Earthlink, and PDQnet, all of these companies are public, and they have fairly decent subscriber bases in the ISP market. The ISP market, there's about, last time I checked, 5,000 to 6,000 domestically and about 8,000 worldwide. So there are many, but there are only about 100, I would say, that really matter. And those are the ISPs that we're pursuing. Universities is actually our first foray into putting something right in the edge, not really at an enterprise, but a university is more of a campus environment, and they have many, many subscribers. Previous to 93 and 92, the internet actually was university. So universities also fairly regularly, the large ones, have fiber in between campuses. And again, it's a very lucrative place to place a server and reach that end user there without selling it or without doing a distribution deal to their ISP. So we're just going one step further. And data and hosting centers, again, some of these entities bleed over and they have multiple business as an ISP, as a CLEC, but Globix, Exodus, and Digex are all good examples of web hosters. And we currently have a deal with actually Level 3, an Internap that's listed there below. And that's more of a data hosting center environment, and that's where we've got servers located, and we're just propagating streams throughout the general internet. Yeah, these are our achievements again for last year. We have actually a little over 20 deals now. We closed a couple last week. About 220 servers deployed. As far as sites deployed and cities covered, there's about actually 55 sites deployed and 27 cities covered. We'll have 14 more in the pipeline. And it's also notable to point out that even though we may have terrestrial fiber or terrestrial facilities going into some of the major cities in the United States, we also have a satellite play that we are working out to get us to the more tertiary, secondary markets. So, for instance, if we had a distribution partner in El Paso that we wanted to reach, a market like that, we could easily do that with the satellite play. And currently we're able to provide about 220,000 simultaneous streams, which is no slouch achievement. That's a very competitive number in the market right now. It's all about scale. So, yeah, this is a pretty good graphic, and I'll do my best to explain it. But again, those are our goals that are listed. And last year, we confined ourselves for a number of reasons to, it had to do with the infancy of our business plan, but we were trying very hard to carry out the quality component of our strategy for MediaCast, MarketCast. And what that means is high bit rate delivery of streams was really our mantra, and that's mostly what we were out doing deals to do. Now we've learned that the market, the internet is improving, the equipment is improving, there's a lot of things around how the internet is improving, caching is becoming very widespread, and we have also adopted some of that technology. And also, again, the internet itself is improving. There's more and more bandwidth. Plus, content providers weren't exactly completely ready for our high bit rate, let's completely improve the internet strategy. So what we've adjusted for is to try to do both. And that's what these axes sort of depict, is direct connections typifies where we'd be directly connected to a distribution partner, a broadband program partner, and then the internet is more like the data hosting entity that I mentioned before, where we would put servers and just propagate it through the internet and do a little bit of both. But we will always stick to trying to increase the number of streams and also trying to increase the quality, and you end up with a really good play there. Also, 3 minutes? Okay. This is the last slide, so we're in good shape. Another thing we confined ourselves to do is we were mostly selling it. We were offering a revenue share with the distribution partner to do the deal with us, and basically they would share in the revenue for the content that we delivered to their end users. This year we're going to get a little bit more creative through Enron's involvement and the wonderful resources that Jeff Skilling mentioned. We have a lot of other resources in our bag of tricks, such as bandwidth that we can trade, bandwidth intermediation deals that we can do. We can swap energy. We can actually swap the product itself for a certain period of time, but we'll do whatever deal is necessary to sort of barter and get us quicker traction in the market. Our real issue with this whole product is the content provider wants you to have all the distribution up and running. It's very much a chicken and the egg problem. And the distributor wants you to have all the content on the network. So basically we need to buttress one side, and this is our strategy for doing this, offering more of Enron's resources to help us do that. And lastly, financing deals, I might add. We do have a direct conduit into engineering and product development, and that's something that we participate in regularly. So I kind of outpaced the slide, but that's kind of an example of where we are. Akamai is a notable competitor that's mentioned a lot in the market. We have a lot of advantages over them. If you want to know what they are, get me later and I'll explain them. I think we're at times not really professing what our strengths are over Akamai. We have a number of strengths over Akamai. They are all about number of servers and number of simultaneous streams, but it really has no commitment to the quality and delivery. So if you look out on the right, that's what we were trying to basically achieve most of last year, and we did that. And now going forward, we want to do a little bit of both. We want to get more and more servers, volume, 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 and also stick with the mantra of high bit rate and increasing the quality of stream delivery for streaming multimedia over the internet. And then we'll just waste them after that. So again, I'm John McClain. Bobby Robertson, Jeff Cape, and Ben Odenborg, and Stephen Sunshine are my direct reports. We have a number of other support people, and everybody's making this happen. I can't thank my team enough. So if you need us, call us, email us. Thank you.